Bitcoin from Scratch, Understanding the Digital Revolution. Episode 7. Bitcoin as a Means of Payment. In this episode, we will discuss the use of Bitcoin for making purchases and transfers, evaluating its advantages, and the challenges it faces in being adopted as a payment method. We will explore how Bitcoin can be used in everyday transactions, its strengths, and the obstacles it must overcome to achieve broader acceptance as a mainstream payment solution. Additionally, we will look at real-world examples of Bitcoin adoption, innovative payment technologies, and the evolving landscape of digital currencies that may influence Bitcoin's future as a payment option. Using Bitcoin in everyday transactions. Bitcoin allows users to send and receive payments digitally without the need for traditional intermediaries like banks. Some businesses and retailers have started to accept Bitcoin as a form of payment, enabling transactions both online and in physical stores. However, its acceptance is not universal and varies by region and industry. Bitcoin has gained more traction in sectors like technology, travel, and online services, where innovation is embraced more readily, while other sectors are still hesitant to adopt it due to regulatory concerns or volatility. One of the main appeals of Bitcoin as a payment method is that it eliminates the need for banks or other intermediaries, allowing for direct peer-to-peer transactions. This feature is particularly beneficial for people in regions with limited access to banking services or in areas with strict capital controls. With Bitcoin, individuals can make payments directly, even across borders, without the need for costly third-party services. In recent years, some countries and cities have even adopted Bitcoin as a payment option for municipal services or public transport, further demonstrating its potential use in everyday life. Bitcoin can also be used for online purchases, with several e-commerce platforms integrating Bitcoin as a payment option. Large companies such as Microsoft, Overstock, and Expedia have started to accept Bitcoin for certain services, while many smaller businesses are following suit, recognizing the potential benefits of digital currencies. The use of Bitcoin as a payment method has also expanded into charitable donations, where nonprofits see it as a way to receive global contributions efficiently without the high fees associated with traditional payment systems. Advantages of using Bitcoin as a means of payment. Fast and cost-effective international transactions. Bitcoin allows users to make international payments quickly, securely, and at a lower cost compared to traditional financial intermediaries, such as banks or payment platforms. Traditional bank transfers can be costly and time-consuming, especially when transferring funds across borders. Bitcoin simplifies this process, enabling near-instant transfers without the high fees that banks often charge for currency conversion or processing. This makes Bitcoin an attractive solution for people who frequently send money internationally, such as expatriates supporting their families. Additionally, Bitcoin's borderless nature means that users do not need to worry about exchange rates or cross-border regulations, making international payments more straightforward. Decentralization and autonomy. Since Bitcoin is not controlled by any central authority, it offers users greater autonomy over their funds and transactions. Unlike traditional currencies, which are subject to the policies and regulations of banks and governments, Bitcoin gives users direct control of their money. This autonomy can be especially beneficial in countries with unstable political or economic environments, where people may want an alternative to the local currency. Bitcoin's decentralized nature also ensures that no single entity can freeze or confiscate funds, providing users with a greater sense of security over their assets. The peer-to-peer nature of Bitcoin transactions also empowers individuals to have full ownership and control of their wealth without reliance on centralized institutions, which is especially important in regions experiencing financial instability or hyperinflation. Accessibility. Anyone with internet access can use Bitcoin, which increases financial inclusion levels. This accessibility makes it possible for people without bank accounts to participate in the global economy and make or receive payments without relying on traditional banking institutions. For individuals in developing countries or areas where banking infrastructure is lacking, Bitcoin offers an alternative means to save, transfer, and spend money without the need for a formal bank account. Bitcoin wallets can be set up on a smartphone, providing a low-cost solution for accessing financial services and participating in the digital economy. As the world becomes more interconnected, Bitcoin's accessibility also allows migrant workers to send remittances back home more easily, bypassing the high fees charged by traditional remittance services. Reduce fraud risk. Bitcoin transactions are secured through cryptographic signatures, which makes it difficult for malicious actors to alter or manipulate transaction data. This makes Bitcoin payments relatively secure compared to credit card payments, which can be subject to chargebacks or fraud. Because Bitcoin transactions are irreversible once confirmed, merchants are also protected from the risk of fraudulent chargebacks, which can be a significant problem in online commerce. The transparency of Bitcoin's blockchain also allows merchants and customers to verify transactions, adding an extra layer of trust to the process. For online businesses, accepting Bitcoin can reduce the risk of payment disputes and fraud, as customers cannot reverse payments once they are made. This feature makes Bitcoin a valuable payment option for merchants looking to minimize financial losses due to fraud. Lower transaction costs. The cost of processing Bitcoin transactions is generally lower than that of credit card payments or international wire transfers. This can be particularly beneficial for small businesses that want to reduce overhead costs associated with payment processing. By eliminating intermediaries, Bitcoin offers a more cost-effective way to accept payments, which can translate into savings for both merchants and consumers. For businesses operating on tight margins, the reduced fees can make a significant difference in profitability. Challenges in the adoption of Bitcoin as a means of payment. Volatility. The value of Bitcoin can experience significant fluctuations over short periods, making it challenging to use as a stable unit of account for everyday transactions. Merchants who accept Bitcoin face the risk that the value of the Bitcoin they receive could drop significantly before they can convert it to a stable currency. This volatility is one of the primary reasons why many businesses are hesitant to accept Bitcoin as a payment method. Solutions such as stablecoins or instant conversion services provided by payment processors can mitigate this risk, but they add complexity to the transaction process. Merchants may need to work with payment providers that offer real-time conversion of Bitcoin to fiat currency, allowing them to avoid potential losses due to market volatility. Scalability and transaction speed. The Bitcoin network can face limitations in the number of transactions it processes per second, which can lead to longer confirmation times during periods of high demand. As Bitcoin's popularity has grown, its scalability limitations have become more apparent, particularly during peak periods when network congestion can cause transaction fees to rise and confirmation times to slow down. Layer 2 solutions, such as the Lightning Network, have been developed to address these scalability issues by allowing for faster, off-chain transactions that are later settled on the main Bitcoin blockchain. However, the adoption of these solutions is still in progress, and achieving widespread scalability remains a challenge. For Bitcoin to become a viable payment solution on a global scale, it will need to overcome these scalability challenges and ensure that the network can handle increased transaction volume without compromising on speed or cost. Lack of education and understanding. The technical complexity and lack of knowledge about how Bitcoin works can be barriers to its mass adoption. Many people are unfamiliar with how to use Bitcoin, how to store it securely, or how it fits into the broader financial landscape. This lack of understanding can lead to misconceptions and hesitancy in using Bitcoin for transactions. Increasing public awareness through education campaigns and simplifying the user experience are essential steps for fostering greater adoption. Organizations and companies in the cryptocurrency space are actively working on making Bitcoin more accessible through user-friendly wallet interfaces and educational initiatives aimed at both individuals and businesses. Wallet providers, for example, are striving to create interfaces that simplify the process of sending and receiving Bitcoin, making it easier for those who may not be tech-savvy to participate in the Bitcoin economy. Regulatory uncertainty. Regulatory challenges also present obstacles to the adoption of Bitcoin as a payment method. Different countries have different approaches to regulating cryptocurrencies, and uncertainty around future regulations can make businesses hesitant to accept Bitcoin. In some jurisdictions, regulatory frameworks are still developing, which can create confusion for both users and merchants. The lack of consistent regulations can also make it challenging for businesses to understand their legal obligations when accepting Bitcoin. As regulatory clarity improves, it is likely that more businesses will become comfortable using Bitcoin as a payment method. Collaborative efforts between regulators and the cryptocurrency industry are crucial to establish frameworks that balance innovation with consumer protection, which will ultimately facilitate broader adoption of Bitcoin as a means of payment. Merchant adoption. Despite the growing interest in cryptocurrencies, the acceptance of Bitcoin by merchants remains limited in many regions. For Bitcoin to become a widely accepted means of payment, more businesses need to be willing to integrate it into their payment systems. Payment processors like BitPay and Coinbase Commerce are making it easier for merchants to accept Bitcoin by providing tools for seamless integration and instant conversion to fiat currency. However, until more businesses see a clear advantage in accepting Bitcoin, widespread adoption will remain a challenge. Merchants need to understand the benefits of accepting Bitcoin, such as reduced fees and increased global reach, to fully appreciate the potential value it brings to their business. As more consumers begin to use Bitcoin, the demand for merchants to accept it will also grow, creating a positive feedback loop for adoption. Environmental concerns. The environmental impact of Bitcoin mining has also raised concerns among consumers and businesses. The energy-intensive nature of the proof-of-work consensus mechanism has led to criticism about Bitcoin's carbon footprint, particularly in regions where fossil fuels are the primary source of electricity. These concerns can deter environmentally conscious businesses and consumers from using Bitcoin as a payment method. However, efforts are being made to mitigate Bitcoin's environmental impact by shifting mining operations to renewable energy sources and improving the efficiency of mining equipment. Some mining companies are now exclusively using renewable energy, and initiatives are underway to make Bitcoin mining more sustainable. As the industry continues to innovate, the environmental footprint of Bitcoin is expected to decrease, which could alleviate some of the concerns surrounding its adoption. Objective: this episode aims to evaluate the functionality of Bitcoin in everyday transactions and its acceptance in the market, providing a balanced understanding of its benefits and challenges as a means of payment. By examining both the strengths and weaknesses of Bitcoin as a payment solution, viewers will gain insight into how Bitcoin fits into the current financial landscape and its potential to shape the future of digital payments. We also aim to highlight real-world use cases, technological advancements, and the evolving regulatory landscape, which together play a critical role in determining Bitcoin's viability as a mainstream payment method. Disclaimer: this content is educational in nature and does not constitute investment advice.